Sunil Subramaniam is with us. Namaste Sunil ji, a very warm welcome to you and festive greetings on Navmi. May the goddess bless us with all that she has in terms of wisdom, peace and of course knowledge. Good afternoon to you and a very warm welcome. How do you see this market correction that is there upon us? Something to be worried about or par for the course?
Not necessarily something to worry about. I think it's a crucial period for the market with the earnings season just starting. Okay, so I think that this earnings season is important not purely from a quarterly earnings perspective, but from the guidance perspective for next year. As you know, this is the handover period for the market, where 1 year forward earnings of this year will now start getting discounted to FY26. So you will see which sectors look promising from an outlook perspective. So I would be keenly watching the earnings guidance and what they talk about rather than the actual versus consensus. So that's one reason I think even FIS will look at it. Second is geopolitically, yes, the crude oil prices, how they will react to the tension every day remains a concern. But on top of that, I think the US, there's been a sudden U-turn in terms of the growth outlook there. So what was very promising rate cut scenario now looks to be ebbing away. And it looks like there may not be another rate cut in this calendar year if these data hold. So I think that means the strengthening of the dollar. And so FIS placing bets on the emerging market would naturally be cautious and wait for a clear direction. So to the extent of the volatility in the FII flows, I do expect the market to also remain range bound in the next few days.
Okay. Sunilji, just yesterday, corporate India as also the entire nation lost its crown jewel, which is this very sad demise of Mr. Ratan Tata. He was the chairman emeritus of Tata Sons, and that post has now gone to Mr. Tata's half brother, Mr. Noel Tata. You've been a very, very long-term watcher of corporate India. How do you see this change of guard? How would you rate Mr. Noel Tata against the backdrop of what has happened? Is he someone that investors can depend upon in terms of carrying forward the Tata legacy?
Before I answer that question, let me also explain that the Tata Group itself, ever since Mr. Ratan took over, after trying a hand with Cyrus Mistry, they have tried to kind of delegate power, and I think Mr. Chandrasekhar has been given a full hand. So to that extent, I think the actual business and financial performance is in very capable hands. So the leadership at the trust level or the owner level would not make that much of a difference except for certain strategic buy decisions or whatever. That's number one. But coming down to Mr. Noel Tata himself, I think Trent's success owes a lot to him. He has demonstrated that how he has made a largely industrial group. Tata was known for Tata Steel, Tata Motors, Tata Cement, Tata Salt, more of a manufacturing. But at the consumer end of it, to have made such a big move, I think it's been very well rewarded by the markets also. So I think that augurs well that the continuity of that, if you can see the progressive forward thinking of Noel, I think it will serve the overall group very, very well. So I remain optimistic about the future of the Tata Group.
Okay. Mr. Noel Tata has shepherded Trent in particular over the last so many years, and Trent has turned out to be a multi-bagger of sorts when it comes to the stellar returns that investors have enjoyed over the last 2 years in particular, and such has been the explosion in price and value that Trent is now a part of the Nifty. Mr. Subramaniam, because you watched the group in such close detail, are you in a position to identify maybe a couple of more trends that could be within the listed space of the Tata Group?
I think it's a very hard call to take because, as you know, a number of companies in the Tata Group are doing very well. Titan, to name one. Tata Motors, JLR's performance does impact Tata Motors, but Otherwise, it's a very strong CV player in India, and the car segment, they've been growing very well. So I would say for me, the auto revolution has still got legs to run. So I would still back Tata Motors rather than a new name to make tremendous strides. And now with Hyundai coming into list and the competitive pressures with the cash balance that Hyundai may possess to do that, I think it's exciting times. But I think Tatas have been there, done that. They've done it the hard way, and I would still back Tata Motors as the entity because the other big one, TCS, is a cash cow and is running along. So to me, being a cyclical, being a rate sensitive, we are entering an area of rate cuts in the future. So I would back that stock as still having legs to run from that perspective. You don't need to search for a new leg. And I think Titan is also showing very good progress in terms of how they are expanding their product lines. And they're now catering to the smallest end and the office goer as well as the high end with their new brand and launch. So I still remain bullish on Titan itself as a entity.
Okay, amongst the 25 listed, 24 listed Tata Group stocks that are clicking in front of me today, Trent is the top performer, 2.6% higher, 82.42. Tata Chemicals carrying over yesterday's and day before's uptick, 2.3% uptick at 1187 today. Tata Investment, which is the holding arm of the entire group, is up 1.3% at 7025, and you have Voltas, Tata Steel, Tata Communication, all of them in the green tick. While Mr. Ratan Tata was the chairman emeritus at the Tata Group since 2012, when he had sort of handed over the baton, the Tata Group companies have more or less had very, very independent lives. Overall, of course, the Tata Sons management takes care of capital allocation and broader themes that their group companies should address. But par for the course as far as the group is concerned, and the handing over of the baton and the change of guard at the Tata Group after Mr. Ratan Tata's sad demise is now with Mr. Noel Tata. He's the half brother of Mr. Ratan Tata, and things will be as smooth as they were earlier. Let's get Sunilji to comment on some of the very strong moves that we are seeing in the pharma space. Sunilji, blowouts happening on erstwhile favorites, Divi's Lab, Dr. Reddy's, Newland Labs, all of them, showing very smart double-digit gains. As a long-term market observer, where would you be putting in your money? Is pharma looking overvalued?
No, I think pharma is a good play, and the reason for that is that I see pharma now developing like the IT as a mature. See, India started off as a generic play, taking products off patent, using process patents to get around product patents. We did the hard grind that way as a more of a KPO. But now you see in the product space we are bidding very strongly. And I think the coming of age of Indian pharma is going to lead to very explosive growth. During COVID, we saw a bounce back, but that was more because of the vaccine stuff. But after that, pharma generally being perceived as a defensive play, I see now over the next year, 2 years, it going a larger part of the growth basket. And so similar to what happened with IT, which went from safety to growth and then corrected a bit and then now again picking up, I would say pharma is on that wicket. The key point, of course, is also the US recovery because US is the largest market. So end of the day, you might do products, you might do everything, but the US recovery is going to get delayed. That might slow the growth of these pharma companies. But I remain that the signs on the US are looking good, and I think over the next year you will see US bounce back to a good growth rate, and that augurs well for the pharma sector because I think the hard grind has been done by Indian pharma. They are poised to now take the product level thing to the next level, and within pharma, the good strong thing is happening is the thanks to COVID again is the domestic diagnostics hospitals. Those business also support. So pharma is not just an export play for me; it's a more rounded play. I would say pharma, healthcare, diagnostics should be looked at as a wider basket, and I would be an investor in those at the current play, especially also because the market overemphasized on infra, defense, energy, all those PSUs and all of that. So they did not probably get the amount of capital that they deserved. So there's a catch up on valuation also supporting that story. So I think pharma looks to me as a good medium term bet.
Okay. Three stocks that are hitting consistent new highs ever since morning, or maybe over the last 4 or 5 days, is Multi Commodity Exchange, now up 3.6% at 64.21. Look at the sharp move that is coming in on the Bombay Stock Exchange, 44.88, a blowout that's just happened, 6.5% higher, fresh record peak, and persistent systems from the IT pack, which is the top gainer there. The most recent high that we have seen is 5437, which was the close on September 27th, and we have 5476 now. So most probably you will have a fresh closing high on this sharp outperformer as well. Erstwhile favorites, KPIT Tech, doing pretty well as far as the prices are concerned. 1789, remember its competitor Tata LXC came up with a decent set of numbers yesterday, and buoyant prices on KPIT Technologies, 56 rupees higher. The most recent high on KPIT Technologies was 1903, which we've seen on 12th of July. So way off the mark so far, but momentum seems to be catching on the long side. Bandhan Bank, a change of guard, Sunil ji, at Bandhan Bank, and that's enthused a lot of investors ever since the morning. We've seen a blowout trade happening on Bandhan Bank, 12% higher. Do you think the enthusiasm that the market is showing on this new entrant is worth it? Very strong volumes, and consistently since the morning, Bandhan Bank has held back its gains.
I think it's a catch-up rally on Bandhan. I think because of the uncertainty surrounding the leadership, he did not get the kind of. So now that the clarity has emerged, rather than put the focus on the individual concern, I think the clarity around the top now being led with a stable person itself has made that stock catch up on what it should have already done. So I think you're seeing that huge catch up, and that's why you're seeing this run up.
Yes, I think it's the uncertainty that's moved out of the stock, which is the reason why you see this very sharp move. Not only is it the top gainer in the NSE 500, it's also the most traded counter on the NSE 500 today. About 2,500 crores worth of shares having been traded, and of course 12% higher. 12.31 crores shares have been traded, which is roughly 10 times the 5-day average. So it's the pent up, how should I say, demand, which is now coming back. All-time high of Bandhan, ladies and gentlemen, was more than 700 rupees in a time when everybody in the market, the broader market itself, Nifty is up 2.5 times from its April 2020 lows. So this complete how should I say, lack of enthusiasm that you've seen in Bandhan over the last 4 odd years seems to be getting sidelined now, and a good move coming in. Record high on IPCA, 4.5% higher, 1658. Metal stocks are doing well. Steel Authority gaining 3.5% at 134. National Aluminium is amongst the top traded, record high, 4.7% higher, 222.80. Strong moves in Hindalco, 2.3% higher, 747. And of course some parts of cement coming back into focus. Dalmia Bharat, one of the consensus buys that we've been tracking, up 3.5% at 1.3% at 1873.75. Anything, Sunil ji, in this kind of a market which catches your fancy on the long side?
I would still bet myself on the consumer discretionary pack. So I would include consumer durables, I would include auto, I would include housing as a larger part of the discretionary pack, because the festival season is on us, and I think consumption hasn't got the kind of what do you call about pent up demand, right? And I think that the K-shaped recovery has taken too much attention, and people have generally been bearish on that space, I would say. So to that extent, I think that with this festival season, I do expect the K to turn into a V. gradually, maybe a U first and then a V. And so I would say that allocation of capital would reallocate towards that space. And so it's a good long bet at this point in time.
Okay. Sunilji, you have always been a value investor. I have known you for so long, and some of the finest, how should I say, compounding returns have come in while you were at the helm of Sundaram AMC. Now we've seen the National Stock Exchange and the Bombay Stock Exchange come together to reverse this mad run towards FNO. So weekly expiries of Fin Nifty, Mid Cap Nifty, even Bank Nifty are being removed from November 20th, as also those of Sensex 50 and BankX. How do you see this move? Is this something that will add to the maturity of the Indian capital markets, or you think this is regressive?
I think neither. So I would say that this is more, at this point in time, it's a reaction from SEBI to the data that it discovered on how's a huge percentage of retail investors making losses, not investors, retail participants making losses. So they are trying to get that very small retail guy out of this essentially. So what I feel is that this is a signaling effect first, right? By SEBI announcing this and BSE and NSE implementing, it's a signaling effect, number one. Number two is the fact is that maybe the small retail guy will now find it harder. He'll have to increase the size of his bets and all of that. So you could see some amount of those retail guys probably now shift into mutual funds or whatever the like, right? That's one point. But what I feel is that overall, when you make these things tighter, there are a section of these people, and that's a significant section, who are essentially gambling at the stock exchange, right? I don't think they are investors. There's a gambling instinct. And when you look at the gambling cycle, right, and having spent some time in Singapore, I've seen how they behave. The more the losses they face, the more they double down on future bets in order to have that one big win, which will wipe out all their past losses. So by increasing the stakes of this, probably those inveterate gambler who are HNI, MNI are going to increase their bets because they want to recover the losses. So which then may not end up fully serving SEBI's purpose of this. But at the same time, let's remember one thing. While we are all beating this horse called F&O with a beat stick, they provide liquidity in the market. Let's not forget that when a fund house wants to sell a small cap stock or an FI wants to sell a mid capish stock, they don't take too much of those, but they do. There has to be some buyer. And unless there is somebody who is doing a kind of speculation there, you're not going to find buyers. Otherwise, everything will be either sell, or buy. So to that extent that I think what we need is, we need the regulation should be for disciplining, but not to curtail. So, and we all know that when you then look at it with the lens of a gambler, the house always wins. Who's the house in this case? The broking houses and the prop books of the FIIs and the others. So that kind of a situation is something that's true all over the world in all kinds of gambling related scenarios. So I think protecting the small retail investor from this kind of a temptation and getting into this path is what this would achieve to some degree. And that I would say is welcome, because these people should ideally be coming in through the mutual fund route to experience equities.
That's, I think, very sensibly put, and that's the reason why you see at least this frenetic activity that you are watching on BSE, which is hinged on the fact that it might just get a higher market share in the cash market than what it already has vis-a-vis the NSE. You have outperformers in the form of CDSL, CAMS, KFintech, a couple of broker AMCs that are doing well. Look at HDFC AMC, UTI AMC. All these counters are exhibiting this move, which might be attributed obliquely to the shutting down of weekly expiries in 5 indices. So that's how it is. Look at NAM India, 9% higher. In fact, there is another data that has come in which shows that monthly SIPs are now topping above 24,000 crore rupees, and the biggest beneficiaries, of course, are the listed AMCs, So NAM India is up 9.5%. You have a move which is coming into wealth management company Nuvama, 5% higher. I would also like to watch JM Financials here. This is also an AMC plus a lot of other business, 5.8% higher. And no surprise that the back end service providers of the mutual fund business, CAMS services, 0.5% higher, 45.17. You have a strong move coming into K FinTech, 0.5% higher, 1043. So that's the entire AMC broker space enthused by this rising SIPs. HDFC AMC 44.50, a percent higher. Sunilji, don't you wish Sundaram were listed? But it isn't. Within the AMC space, what would be your top pick?
No, you see, the market leader should always be the top pick because it's a very concentrated industry. The top 10 players account for 80% of the industry. The top 3, 4 account for 50%. So it's a very highly operating leverage. There's no financial leverage involved, but high operating leverage in the case of branches, sales force, costs. So the bigger you are, the more you're able to spread your things over the cost base, which is smaller. So the bigger ones are always going to be ones that are benefiting, and HDFC and iPro and those kind of names, and of course SBI also has the AMC there. But I think one important thing just to remember, going back to the beginning of today's conversation, is somewhere in the Tata investment thing, Tata AMC is also the embedded value of that is going to reflect in the Tata. It's not listed right now, but will. And your question on Sundaram AMC and listing, see, why do these companies list at all? As I said, they're operating leverage, they're not financial leverage, they don't borrow, they don't need capital really that way. The reason they do that is to reward the employees with stock options and provide some kind of a pay for performance kind of a thing, right? Now at Sundaram, I don't think that, that was ever, that crossed my mind in terms of when I was the managing director there, right? And so I don't think there's a need for capital. The capital may arise only if you look at an acquisition, you maybe want to use that to finance an acquisition, right? But that's $1 million question in terms of what's in the market. But I don't wish that it was listed because you are then answerable to a larger public. See, you look at it this way, right? Owners looking to encash their value. Our owners, Sundaram's owners were not. They are always focused on the business and the core and making money off the company. Through profits is fine, but not necessarily through market capitalization. So not in the near future. Like I said, sometime. Sorry. Yeah.
What, Sunilji, one of the finest corporate brains whom you know very well, but will remain unnamed, once said that when the market is giving money, take it. Decide on what to do later, because when you need the money, the market will be very stingy and take its pound of flesh in terms of either a higher equity dilution or a lower stock price. But when the market is generous, close your eyes and take the money.
I agree.
Later we will decide what to do with that money.
I agree with that, where you need a fixed asset investment plans, right? Like I said, the AMC business is very asset light. So that's where I was going.
Yes, absolutely. And you are absolutely right, sir. The main reason for AMCs to get listed is to retain talent by offering stock options. We've seen that happening in HDFC AMC. Some of the fund managers made a killing, a financial killing, but they were rewarded for their very long tenure in handling the AMC and providing stellar returns. So it was a very ample, a very generous, and a very good reward. We've seen that happening in Anand Rathi Wealth when the wealth manager got listed. That's true for many other wealth companies as well, Aditya Birla Sun Life, to name a few. And it's very well put when you say that the money was, the currency is, the stock is used as a currency to retain talent, and let's hope Sundaram gets listed and they remember their earlier employees as well. I would be the happiest if they do. 3:26, a time for the market to wrap up. Sunilji, your closing thoughts. The week has gone by. The bulls, while they haven't made their presence overtly visible, have retained 25,000 on the Nifty. How do you see the underlying strength of the equity markets against the backdrop of this very high order of FII selling to the tune of 55, 60,000 crores, equally matched by our domestic friends?
So I see that there is going to be volatility because FIIs in taking on risky emerging markets in a time of geopolitical volatility, in time of US presidential election related volatility, the US Fed's outlook volatility. There are so many things, and the oil prices and all of that in the case. I expect FIIs to remain wait and watch, come in, go out, come in, go out. But domestically, I would like to point out yesterday's AMFI data, which shows that pure equity funds got 34,000 crores plus hybrid funds got another 10, 12,000 crores and passives got another 2,000 crores. So, and in the hybrid, some part goes to debt. So, my estimate is about 42,000 crores is the cash generated for mutual funds in the month of September, which would be available in the month of October to buy when FIIs sell. Right? Now, after this 42,000 crores, my estimate is about 20,000 crores is allocatable to large caps and large mid caps, which is where the FIIs play. So, as long as the FIIs selling remains within a band of 20 to 30,000 crores, I think the market will be in a narrow band. But if FIIs selling steps up to the 40, 50,000 crore, then I don't think that all of this money that's raised by mutual funds can be hit in large caps, because small cap funds and mid cap funds account for significant proportion, thematic funds. So fund managers can't just go and buy everything in large cap. So if the FI selling steps up above the 40, 50,000 crore mark, expect a little more volatility in the market. But if in the 15 to 20,000 range, domestic fund managers have enough firepower to buy good quality stocks when FIIs sell it. So a range-bound market, in my view, is the immediate future. And the reason for that is also that, like I said, earnings season on a crucial handover period of the 1 year forward is upon us. So reading the commentary, guidance, understanding the sectors and reallocating that, fund managers may take their own bit of time to understand the data and then put the money. So expect a volatile October, but not too much of a correction, because there is enough money in the domestic market to support a buy.
Okay, Sunilji, now I am going to ask the most difficult question, and you can't wriggle away now because SEBI doesn't govern you any longer. One stock pick for the next 1 year.
For the next 1 year, if you ask me, it's got to be State Bank of India.
Okay. With that, Sunilji, thank you so much for your time. As always, it's such a pleasure to talk to you. I hope to meet you soon when you are in Delhi next, or if I travel down south. Have a good weekend, my friend, and festive greetings.
Thank you. Thank you.
That, ladies and gentlemen, was